Big turnaround, as I pointed out, but coming off a low base last year because you did have a slump in fertilizer prices back then. Have you seen a normalization in prices now?
I think the prices have stabilized, although at low levels. So, I think overall the result we've got, we think is a good one under still quite difficult trading conditions.
Do you see those trading conditions improving as you enter the second half of the year?
I think in some areas yes, and in some areas no. So in the manufacturing sector, which typically our chemical business serve, it's going to be still quite difficult. I think volumes will probably in all likelihood remain quite stagnant. Whereas in the mining space, a lot more positive, a lot more buoyant conditions, and I think some of the growth that we've seen in the first half will certainly come through quite strongly in the second half, and hopefully some more.
How about the agricultural space? What's that looking like at the moment?
Well, it's an interesting space. From a fertilizer perspective, we know that the market is in likelihood to shrink. We've seen that the farmers, in fact, in the prior year planted too much maize, and there was probably 12.8 million tonnes of maize, where the country only needs somewhere in the order of 9 million tonnes. So we are expecting farmers to pull back by anywhere between 10 and 15%, and they're in that process at the moment. But it is an interesting space, and so far we've been able to maintain our volumes.
How's the maize space countered perhaps by the wheat space? How's that looking?
Well, I think wheat in the country was down, so there was a particularly poor wheat market. But worldwide, agricultural prices, crop prices are on the rise. Dollar prices are starting to move. Perhaps less so here in South Africa, in that there has been some overproduction.
Do you ever have all three main segments of the business performing well at the same time? Do you have that perfect storm ever?
Yes, no, we had that about 2 years ago when all three businesses really performed together. But I think more importantly for us is this broad strategy we have of diversification into 3 separate markets in terms of our customer base. It's really important, and we can see it in a year like this where there's some areas which are difficult, and yet there are other areas where there's good growth coming through, and altogether I think we have a good balance to the business today. And
of course you are quite a unique company, you are very specialized, you have intellectual capital, you operate in specific spaces. To what extent do you think that also gives you the edge when markets are tough?
I think it always does that. We try very hard to be innovative, to create value for our customers, and we're permanently looking for new ways to be able to do that. And there's still many ways that technology today is coming to the fore, and there's always brand new opportunities out there to be able to do exactly that.
And of course, so you are really at the mercy of the weather, you're at the mercy of the markets, and also the mercy of the rand. How's the rand treated you this year? Because it didn't treat you very well last year. Has there been any improvement?
Well, I think the rand is probably the most important driving force here than any of the other factors that you've mentioned. It certainly impacts on all of our customers. They all do much better in a weaker rand environment. It does impact on our business, and I think under the circumstances of this extremely strong rand, that we're quite satisfied with the results.
And of course your customers also being in the manufacturing industry, and we've seen that very poor results coming out from the manufacturing industry this year. Do you think they're starting to learn to live with the rand at around the 7 rand level against the dollar, because confidence is improving in the manufacturing sector even though the sector is still under pressure?
Well, it's definitely under pressure. If one looks at the manufacturing index, you'll see that the volumes are roughly where they were 5 years ago. So it is a tough space to be in. You're not nearly able to export in the way that you perhaps were able to export over the last couple of years, and you're facing import pressures. So it is a very difficult area to be involved in. So one would hope that there will be some relief and perhaps a weaker rand to come in years to come.
Of course, last time you came in, we were chatting about the rights issue, the 1 billion rand rights issue, which has been completed. Now, you've used some of that to pay down debts, which is obviously going to help your debt servicing costs going forward. The rest is being invested in a new plant for future capacity. How's that progressing? Have you started work on that plant?
Oh, yes, absolutely. I think the plant is well on track. We expect completion of that plant probably the first quarter of the calendar year 2012. It is on budget as well, so we're actually quite delighted with the progress being made.
And do you have sufficient capacity until that new plant comes on stream in 2012?
No, not at all. We ran out of capacity some 10 years ago, and we've been able to support the business by basically importing the materials that we require. So when this plant comes on stream, it has the ability there of enabling us to backward integrate and to improve our margins in the future.
And you can't get the plant completed any quicker than that?
No, we're trying very hard, I can assure you.
Talk to us about the second half, because you traditionally do have a second half. Though we were chatting to Mark Ingham in studio this morning. And he thinks you could still see some pressures in the second half.
Well, I think the rand pressure is still there, but typically we have a much better second half than first half, because the nature of our agricultural market is it's a much more seasonal business. It sells most of its products in the summertime, as one could expect from a fertilizer business. So we would normally produce a much better result in our second half, and I see no reason why, in fact, we shouldn't do that this year. And
do you envisage any improvements in volumes or pricing in the second half?
No, I think that the prices are where they are. There perhaps will be some improvement, not in rands, but certainly from a dollar, lifting dollar prices. I would expect some moderate price increases going forward. But maybe tempered still by the rand dollar effect.
Of course, we also heard recently that Sasol was withdrawing from the retail fertilizer market due to an agreement with the Competition Commission. How does that affect you, if at all?
Well, I think there's been two important developments in that agricultural space. Not only is it Sasol that's withdrawn from the retail space, but Yarrow, one of the world's largest fertilizer company, has withdrawn from the South African market. So we're now in a position which clearly gives us, as well as others, a fantastic opportunity in this particular space.
Okay, you chatted about the investment in new capacity, which is going to come on stream in 2012. How about investments in intellectual capacity, which actually sets you apart from other chemical companies? Do you still invest in that when times are like these?
Oh, absolutely. I mean, we're continuously doing research in many different areas. At the moment, we are in the process of commercialization, or really just starting the commercialization of our in-house developed electronic delay detonator. And it's been so far well received in the trials that we've done with mining houses, and we think that's going to bring a lot of value to many mining houses in being able to cut their costs.